I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market and markets around the world continue to focus on interest rates this last week. Bond markets have been under huge pressure, with rates accelerating to the upside over the last 4 weeks. The bond market got a little bit calmer early in this last week, and then we saw the markets firm based on that, even though by Thursday the interest rates were jumping again, as high as 1.56% on the 10-year. That brief stabilization on Monday brought a massive rebound in the stock market, as buyers are just waiting for the opportunity for that next surge to new highs, and the S&P 500 got up over 100 points that day, finishing up $85 points on the day. But that was it for the week. As it appears, bulls are now getting hooked in those rallies. It's certainly a changing environment. Tuesday we had a choppy day, wasn't a big range, and then the last hour there was pretty good selling of 30 points in the S&P 500, so it gave part of those big gains back. Wednesday, yields were popping again, and then the market gave back all the rest of what it had made on Monday. Gold and silver got slammed, and we were warning on gold a month ago about the conditions having changed in there and breakdowns happening, and since then gold has been very weak and silver following it. Interest rates have had a big effect on that for sure, and commodities overall are pulling back as these interest rates have been moving up. Selling early in the day on Wednesday recovered on a rumor that Operation Twist was coming on Thursday. Powell was due to have a speech at the Wall Street Journal virtual event, and there was a lot of hope because the repo market is weirding out again in a big way and in a different way. There was hope that Powell would come with some supply to the repo market, which had been trading below the 3% penalty rate. That's the penalty you pay for failing to deliver to the counterparties. And that's an indication of a lot of shorting coming into the bond market as big institutions want to get on the other side of that, big bubble that we have had in the bond market for decades, thanks to the Fed. So they were waiting for that on Thursday because Powell was going to speak, and certainly he would mention something that would ease the situation in the repo market, and also the fact that interest rates were spiking on the upside. Thursday, there was some huge swings actually early in the day waiting for Powell to speak at noon. The market was weak overnight as China got really hammered. The China Next Index was down 5%, and that's very heavily weighted with techs and growth stocks. And that got sold big actually for 3 weeks, and China all of a sudden quickly was down 15% in that stock market. So yes, stocks can fall, and certainly you see that worldwide. There was of course a huge surge in China credit, and that has been rolling over now, and that is a matter for the world to pay attention to. So let's keep our eye on that, on the news, on that China credit conditions. Powell's speech did come, and it was a big disappointment. There was no comments whatsoever on the repo market or the big upward move in interest rates. And there was no Operation Twist that was coming, and there was no extension of the SLR exemption, which puts more liquidity in the banks. And there was none of that. And the S&P 500, which had been chopping up and down in a big way, had moved up 20 points just before Powell, and all of a sudden it was down over 90 points in these wild, huge swings in this big session that we had there, 120-point range in the S&P 500, only closing down around 50 points on the day, but still only. That was a pretty big down day. And it kind of shows you that the Fed now doesn't want to be stepping in and reacting to these movements in the market, in the interest rate market, because if they show their hand, they're likely to show the hand that they are impotent. They have nothing left that they can do. And if they want to do anything significant to settle the repo market down, that is going to show the problems that are in the market. And they don't want to show that hand. So they backed off. It disappointed the market. And then we had those big swings and down day. Friday, the markets tried to move up on a very, very strong payroll number. They expected payrolls to increase by about 200,000. It was 379,000, and a big upgrade to January. Slight improvement on U3, which is 6.2, but all of a sudden they're focusing on U6, which is up around 10%. So they just look at what they need to look at based on how they want to react in the markets. The economic recovery is certainly underway when you look at those numbers, and there's lots more of that coming. But remember that, bad news was good news for so long, as obviously there was going to be a ton of the stimulus that comes from the Fed and comes from the government. But now, good news may be bad news, as you see the market not being able to hold on to its early gains here on Friday, where it was up, the S&P 500 was up about 45 points. It fell swiftly to down about 35 points in about the midday period. And now here, as we're looking at this at midday, the S&P 500 is nearing the even area. So lots of chop, lots of upside moves that fail because, again, I believe that the bulls are getting hooked. And all of those people that are kind of new to the markets, that have been trading and don't know what real markets look like, that you could always buy everything, right? Well, they may be learning that things are changing, and we're in a very choppy environment, and this is actually a trader's dream. Right now, right now you're getting 4 trading days within one day if you're an active trader and able to move in and out of this market. You just have to widen your parameters because, as you can see, they're going to be really wide. Overall, a choppy day. And what you could see here on Friday is there are lots of sellers waiting in the market. Yeah, you're going to get some upside movement and rebounds that look pretty nice. But I think the sellers are waiting in the market. And I think this correction that we've been talking about into mid-March, well, that clearly is here. And I think next week is going to give you more problems. We're going to talk about that as we move further into the show. Coming up is a look at the NASDAQ in a little different way than I've ever looked at it before for you. We're going to do a short-term look at gold and silver, and we're going to look at the 1 to 3 month outlook in the S&P 500 market, looking at SPY. I want to let you know that next week is my off week. I take once a quarter off and do not do any videos, so Market Week will be on vacation with me, and there will be no show next week. Same thing for all of our videos that we bring to all of our members. And we do produce 3 videos a week, so at least, and then in YouTube we put up some little short ones that Arvi does a phenomenal job on. So you want to watch those on YouTube also. So no Market Week coming up next week. For the day here, we have the stock market. Overall, let's just call it on the week, widely mixed to down. How's that? The reason I say that is because the Dow Jones is actually slightly up on the week in this move that's still going into these recovery stocks. That also would mean that the S&P 500 would have a smaller decline than the rest of the market, which is down over 1.5%. But the big down movers, the Russell down about 4%, and the NASDAQ down well over 4%. So the second tier of the market, third tier of the market, and the NASDAQ, which are those growth stocks, tech stocks that have been coming apart, were the weakest part of the market. So we'll look at the NASDAQ. I think you're going to be interested in how we look at it in another minute or so. Bond market, 30 years, down 3 points. The 10 years pop again, up about 10 or 11 basis points, up to 1.57%. So it's another big upside move. The week before, we got up to 1.61%. And it's probably going higher than that. You know, my call for the year was up to about 1.9% at the beginning of the year, when it was hovering around 1%, and I have no reason to change that other than it might actually be going to 2.4%. So lots of reason to believe that interest rates can be going up, and you can see that market. We called the bear market starting months ago in the bond market, and that has been certainly correct. The gold market down about $36 on the week right now, again at midday here. Silver market getting pummeled, absolutely pummeled. The silver was stronger, and even now with this, the silver pattern on the intermediate term is still better than gold, significantly better. But it got hammered this week, and down about $1.70 on the week. And I'll tell you what, I'll make bet that silver has an up week next week. Actually, I did make that bet. Dollar market, that of course has been negatively affecting the commodity markets and gold and silver as it has moved up and almost miraculously makes our 92 target that we had in the dollar market, which is great. The next level is at around 92.50, which we think is possible under the condition that these rates stay firm. And the safety bid stays in the market as money moves into the dollar around the world. The oil market, interesting in here, up $4 in the week, and it had moved up in advance of the OPEC meeting as there was discussion that there would likely not be increases in production. They would hold their production cuts. And that is what's happened. It's moved up, also benefiting from Goldman Sachs raising its target on Brent crude up to about $80. So you can factor in the spread between Brent and the light crude market. But we see the area near 67 as a pretty significant resistance area on that light crude market. I have some doubts it's going to be able to get through that level. So you can see that if you watch our Future Speak show on Wednesday, where these levels are, and we cover all of these commodities, 24 different futures contracts in that very great Future Speak show on Wednesday for members, level 2, 3, and 4. All right, so that's the opening of the show. I want you to please go to askSlim.com, explore our website there, subscribe to our website, and if you're watching this on YouTube, please subscribe to our YouTube channel. We put a lot out there every single week. Click the notification bell and it'll let you know when we've posted a video. Make sure you like this video, give it a thumbs up. And of course, if you don't like it or there's something you disagree with, love to have your polite comments on there, because we have people that just like to troll, and then we just ban them when they do that. So be nice when you come on there, and please do give us a thumbs up. Follow us on Twitter at askSlim. And you have questions about our membership, you can write to Matt at askSlim.com for membership information, and we'll be glad to help you with that. I'm gonna do things a little bit different right now, because I want to look at the NASDAQ in a way that I don't think I've shared it this way before, though some of our members have seen it, is I'm going to really look at the momentum conditions using our very unique app that we developed, the Slimulator Momentum Tracker. The reason I wanted to go to our app is because there's been big down move in the NASDAQ, as we have shown. And with that big decline, I say big decline, S&P 500, we thought it would move down 6 to 7% in this time frame. It's moved down 5.7%. The NASDAQ has moved down over 11% during this period as those stocks have fallen pretty hard. So I want to look at those stocks in the NASDAQ 100, and I want to get an overview on them, which are doing poorly, which have got a good chance that they're going to continue to do poorly, even though you may get some rebounds, and which stocks are resisting those declines and giving you some good sense that they're strong. So I'm going to go to askSlim.com, and I'm going to go to the workbench and the momentum tracker, and we're going to look at the NASDAQ 100. And we have our built-in algorithms in there, so we're just going to explore using that. So here is the askSlim website. Those of you that before I leave this, I want you to notice the level 2 special up here. I'm going to show you what that is in a little bit, but if you go to that green square, you could sign up for our special if you're a first-time member for level 2, and I'll tell you about what that looks like in a few minutes. So what I'm going to do now is I'm going to go into our workbench that you see right over here. This is like the hub of askSlim.com, just so that I can take a look in there. So I'm going to go to the workbench. And now I'm in the workbench, and you can see all the things that we have in here. So what I want to do is go to Momentum Tracker, and I'm going to click on that, and it's going to bring up the Slimulator Momentum Tracker. This is our own app that we've built, which is absolutely amazing if you've never seen this. What I'm going to do is I'm going to select a watch list. We have 22 different watch lists built in here, and what I'm going to choose is the NASDAQ 100, as you can see right there, and that's going to bring up the NASDAQ 100. So I just want to give you a little quick sense of what I'm looking at in here. What I want to do is I really want to get a sense of what's the strongest and what's the weakest stocks. So it has all 100 stocks in here by alphabetical order, but I'm going to sort and scan on them because I really want to get a good sense for the conditions of these stocks. So you can see here long-term, intermediate, and short-term. These are momentum conditions. That's what we're really focusing on because we think momentum is so important. We're looking, when we look at our directional bias, it's an outlook for the next 3 months. And you can see the directional bias is set up right over here. And every once in a while, it's going to flash the way that it is. And I want you to note here that we're looking at a pie chart, which essentially tells us that for the directional bias ratio, that 27% are positive and 16% are negative, and a huge 57% are neutral. So we're going to look at this and do a little sorting and scanning because I really want to get a sense for these conditions. So I'm scanning on directional bias, and you can see it goes up from very bearish to very bullish in here. So we've been getting some big declines in the market, right? But when I look at the NASDAQ 100, I want to see the stocks that are actually still in very strong condition. So this is really great. I mean, if we just look at, let's say, the top, this is top 6 we're looking at right now. This shows you American Airlines, ADP, Comcast, Expedia, Fiserv, and Fox. All are very bullish. The next 4 below that would be Fox A, which is, of course, the same thing, JB Hunt, a transportation stock, Kraft, Marathon. Marathon's been turning up. And you can see all 3 of these momentum conditions are very bullish. If I change my directional bias right over here from directional bias to the long-term momentum ratio, you'll see this change, and you'll see the NASDAQ still has long-term that is just in great shape. So that would give you an expectation that these stocks, even though they're correcting, are still in good shape really long-term. When I go to short-term right over here, momentum ratio, look what's going on. You've got 68% negative. So what it says to you is you're getting short-term corrections under very bullish conditions when I look at that. Let's now do a little more scanning right in here, and let's change this to the most bearish, the ones that are very, very, very bearish. And here, the top 6 you can see, Biogen, another biotech. So there's 3 biotechs right over there. Gilead, the third one, very bearish. Insight Corporation, NetEase, Regeneron. You can see those bios are just in terrible shape right there. VeriSign, Vertex, Xcel Energy, and Amgen. Those are another one of the biotechs really in bearish condition. And you can see these negative conditions that are right in there. So that's really cool. So I wanted to show you the top, how the conditions are overall, that while the NASDAQ is correcting, the long-term conditions are still very strong. And while the stocks that are actually doing the best, and you can see in here that the stocks that are doing the worst and are in really bad shape are really these biotechs. There are a lot of them, and even if you get a rally, they're likely to keep going down. I'm going to go to scan mode for a second. What I want to look at in the scan mode are short-term stocks that are bullish. In other words, this is going to tell me in the near term which stocks have done really well while the market has been going down. And I'm going to scan that. And you can see in here, it's pulling up these 6 stocks, which is really cool. And it's telling you under these conditions of the market going down, these 6 stocks on the short term have done really, really well. If I want to look at the short term on bearish stocks right over here, we'll just update that, and it shows you the stocks that have been at the near term bearish and have done poorly. So you're able to scan that way. I'm just going to stop that scan, and you can see that very clearly. So I hope that was helpful to you. As you can see, the conditions in the market, and I think the most helpful thing is looking at the overall condition on the long term right over here, which is still 75% bullish, versus the short term right over here, which is 68% bearish, only 15% bullish. And that really gives you a story on the NASDAQ, I think, that's really important. That is that the overall, what's going on overall, the conditions of the NASDAQ are that it's in an intermediate correction or short-term correction in what overall is still a positive period that we see here. That is really saying that there's another rally coming, which I said would be out in the area of April, May, and I think that's really what we're seeing in here when we look at the NASDAQ. You can actually have this momentum condition. The way to look at the momentum conditions with the Slimulator Momentum Checker, all you have to do is become a level 1 member. So I wanted you to see that level 1 membership is $4.95 a month, and you get a lot of things in there also, and then you will have this great thing, or it's $30 a quarter, so $10 a month. So sign up for that. Unbelievable. If you're not a member now, $30 for a quarter, and you get this great tool that we developed. So I wanted you to see that. You could really get a sense for that what this looks like is probably a temporary decline in the NASDAQ, and then we'll see what it has as far as strength potential on the upside once this correction is over with. All right, so we talked about Apple. We talked about the NASDAQ, and you can't hardly talk about the NASDAQ without going to Apple. So I want to do that right now. Just do a quickie analysis on Apple because I think this is important. So this is a look at Apple on the weekly cycle chart. For those of you that aren't brand new, these are cycle brackets on the bottom. They give us it's a drawing tool. They just help us see where the movement is. That's money flows in and out of the market, and it moves in a very, very consistent period is what they call it in the cycles. This is the XLK, the dash line. So I just wanted to look how that, you can see how it compares in Apple. We had a March target of 115 to 118 in Apple. It got down to 117 this week so far. So very much following what we believed. You see momentum turn down right over there. And I think that shows you a very, very good picture of the fact that there's probably another week or two on the downside in Apple. Maybe you get down to 112 potentially, but when it gets far away from the 34-week moving average, eventually it comes back to it, as you can see right over here, and that's what you have. So on the daily chart in Apple, let's keep this really quick because it is a quickie. We talked about the fact that there was a head and shoulders that formed in here. You can see the left shoulder and the head and the right shoulder. It failed at resistance as it was supposed to. And look where the target is. The measurement right there, it nails it. This looks like it has another week. We'll call it 4 to 7 trading sessions to go. And then this decline in Apple should be over with. So that's the quickie analysis in Apple. And if it's 11.2% of the NASDAQ, then what you have to believe is that we just showed you in the NASDAQ that this decline we're in, though severe, is likely temporary, that you could see that Apple is going to be part of that right now. So that's our quick look at Apple. Let's do a quickie here on gold and silver also. We're going to look right now at only the short term in gold and silver. So I'm going to switch over here to /GC. I often show the weekly in here, so I decided to show the daily patterns. Now, we have a condition in here that isn't really great. We saw this turning down and breaking down, and this yellow zones are where you get the big corrections, where you get the nesting in here. The dashed line, if you're new here, is silver. So we overlaid the silver pattern, and you can see it's actually stretching down past the low that we expected and seems to be trading with silver right over here. The minor third cycles in here were very clear right at this point, but the higher interest rates and the silver weakness, which became pretty extreme, is dragging gold down. Now this gold should bottom here with silver and get an uptick. So we're looking for about a potential for 1750 in the next, we'll call it 1 to 2 weeks, in a rebound in the gold market. Silver market, let's switch over to /SI, has our complex cycle structures in there, and what this helps us see is when it's moving up to the top of the structure, it's bullish, and when it's moving to the bottom, it's more negative. And right now we have put in, see the low due right over here. You see the arrow where the low came, and that was a little early right over here, the low here a day or two early, and then it spiked to the upside. Well, it's due right over there also. So we're looking for silver to make the bottom in here also. Look at these cycles right in here. I'm just going to look at more of them so you could see. See where it made the bottom there, that green arrow, the green arrow there, upward move, upward move, upward move. And here's where it's due right over here. So we actually think that silver has a pretty good potential to get up to 27 to 27.60 in the next couple of weeks. The anchor point still may be lower. We're not 100% sure about that, but the structure and timing really says that silver should be moving to the upside starting in the next week. So I wanted to share that with you. And gold and silver, a rebound is likely coming. And that's why I said at the beginning of the show, I've already placed my bet, and I would bet that silver is going to have an up week in the coming week. And you can see that right there. To learn more about cycle analysis, please do go to our cycle analysis informational page for the cycle analysis workshop up on the top nav, and you'll be able to see a video and learn more about that. So that is the quickie in gold and silver. I tried to keep that about a minute, but I had 2 different symbols in there. So I hope that was great information in there. I said that we'd be looking at proprietary indicators, so I want to go back to it so that you can understand what that means. So here we are looking at momentum conditions in the silver market, and when the momentum conditions were positive, when the slim ribbon was positive, it was able to trade on the upside. This is our proprietary slim ribbon PO that you could see right over there, and that gives you the condition. Now it's turned neutral and then negative right over here. This is going to have to turn positive again before you can get any real upside. So I wanted to give you another peek there. Slim ribbon PO and the slim ribbon are the best momentum indicators you will ever work with. All right, so now we're going to jump over and look at what's next. We're going to look at the stock market. But first, I've got more to show you. At the beginning of the show, I showed you where to sign up for level 2. There was that little green box at the top of the main page. So I want to tell you about this. For new subscribers, or for upgrades from our level, free level or level 1, you can now step up to level 2 for just this amazing special we have on. What's included in here? Well, you're going to get our stock index report live stream. I'll show you that right now. You're going to get our stock index report daily. I'm going to show you that also. You'll get our weekly stock index report, weekly ETF review, the Slimulator Momentum Tracker, which I just showed you, that amazing app, askSlim video library with over 600 videos in it in 9 categories. And you'll get our workbench that I just showed you with great planning tools in there for trade planning. So amazing things. $22.50 for the first month, and you can get a discount quarterly. If you click on that, it'll show you what those prices are and how to sign up. Just amazing. Go to the top of the askSlim page. If you have any questions or if you can't access this, just write matt@askSlim.com for information, and he can also send you that link. Let's take a look at actually what this is. So we want to look at the stock index report live stream. It says live stream, and it is a live stream. This is a live chart we're looking at right now, and you can see the amazing rebound that's going on right now in the stock market. As when I started doing this video, it was trading way down over here, and now there's been this big rebound. What are we looking at here? Well, this is yesterday right in here, and you can see how the what we call the reversal scout kept putting you on the short side in here. Now for today, the yellow zones are acceleration zones. Normally when you get into the acceleration zone, they go through it, so you can get a big trade like that. And then if you get to supports and it stops and reverses, man, that gives you a good signal. You can see there is a little upturn in the reversal scout going on right now as this market is reversing and moving up. It's a very volatile market now, so we're not exactly sure if it's going to be able to hold these rallies, but there are signs that that came from the right spot and that the market is giving you a somewhat of a reversal right now. So great looking information in here. You'll get our supports, you'll get our resistances, you'll get the areas of potential acceleration to catch those bigger trades, and the reversal scout, which is a little wiggly now, but normally keeps you on the right side of the market and lets you catch those bigger trades. So that is a look at this great live chart that we give you every single day if you are short-term traders. You are looking at 15-minute charts in the S&P 500, NASDAQ, and the Russell, and it really helps you understand which are the strongest or weakest. So if you wanted to buy something today, this is absolutely screaming at you that it's the strongest when you look at that, and this was telling you that it was weak, and this was telling you that it's weak. So you'd be buying S&P 500. If you wanted to do a pair trade, well, you'd be buying S&P and shorting one of these, and you're very likely to get an overperformance on the upside by the S&P 500. So it's great for pair trading, great for intraday trading, short-term trading, scalping. This is the kind of information that you want. So that's the stock index report. I also want to show you, I want to go back to our main page right over here. That's not the main page. This is what I want right over here, is the daily snapshot. So I wanted to give you an idea of what the daily snapshot is right over here. This where we give you fantastic technical information on the S&P 500, the NASDAQ, the Russell, and our technical evidence information. I'll show you all of that right now as I scroll down over here. We'll just look at the S&P 500 for the technical overview. You get all of this information fresh every single day. Our upside overview, important levels, the downside overview, our technical briefing, and then you're going to get this trend and momentum technical evidence graphic that you can see, and it shows you that the near-term intraday conditions have been negative, and of course that's been leading the market down. The short-term conditions on the daily charts have had neutral action in here, though the reversal scout has turned negative. This is all on the S&P 500. So you get this for the NASDAQ and also for the Russell. It gives you this 2-hour chart with the important zones on there. It also shows you the projection oscillator here for the 2-hour chart. And also gives you the relative strength index that you can see on that 2-hour chart. You're also going to get our daily annotated chart that I normally show for our in Future Speak for our members, and all of the cyclical information that you see there. So great information. Just a ton. Every single day you get this. You're also going to get the technical evidence comparison that you can see right there, where you look at the S&P 500 and the NASDAQ and the Russell on long-term, intermediate, short-term, and near-term intraday with our MCI reading that you can see, and it shows you what the conditions are, bullish or bearish, and these beautiful momentum, 2-hour momentum charts that has also on it our MCI, market condition indicator, and you can see how the NASDAQ plunged through the swing zone and gave you the sign that it was absolutely the weakest of everything, and we're getting tests of those right over here by the S&P 500, and still the Russell is stronger on that when you look at that. You're also going to see our cycle analysis table right over there. I could go on and on. Man, this is crazy. I'm just taking too long because I wanted to see how fantastic this information was. All of that you get right over there, $22.50 for the first month. Unbelievable. How can you not sign up? Here's just a list of the video library that you'll get in here of our 9 different categories of videos, over 600 videos. Yes, $22.50, that's included. So that's it. Make sure that you, this is going to end now. You're only going to get another 8 or 9 days. So please do sign up. Again, you have any questions, write to Matt at askSlim.com for this phenomenal level 2 trial. You just can't afford not to do this, really. So if you're new to the markets, you're going to get a ton of information from us. In those videos, you're going to be able to learn so much of what I teach, of what I've learned and taught. Over 47 years I've been trading in the markets. So please do subscribe, support our business, and support your own growth in the markets. You'll never get this much information from any one source, especially for this amount of money. You may pay hundreds or thousands for it. That's it. Our level 2 trial ends just on March 14th. All right, stock market. We're going to take a look at this SPY 1 to 3 month outlook. Fantastic movement that we've had in here time-wise. It took longer for the stock market to peak than I had originally thought. It moved up higher, significantly higher than I originally thought, but still the cycle rhythms remain the same, and the corrective period that could have started earlier but ended up giving us actually bullish patterns still is coming at the right time. And that's the importance of the cyclical rhythms, the flow of money in and out of the market. So that's that silver chart I was showing. I'm just going to go to the weekly SPY right over here. And here's your SPY. Now, we were, again, if you look at those yellow areas right over there, that's every single spot in here, but going back to 2018. Where the cycles were nesting and brought the corrections that we were looking for. This was outsized, of course, because of COVID. And then the one that occurred back over here in last year in the late summer, fall, was 10.8% on the downside. We had originally thought it was going to be something like that, and that would take you down to that major 23% right over there. But this doesn't really look like that's going to happen when we look at this. And we had upgraded it to a 7% decline, though the NASDAQ down over 11% on this move. And you can see right over here that this points to that 7% decline around 366 on the SPY. There is still time for this to happen. as the shorter term patterns are suggesting still another week or more of downside risk. And it makes sense that we would get to that level around 366. But if you look at the analysis that I did on the NASDAQ, which is moving the market down, that there's the conditions are such that the expectation is that we will bottom soon and that we will then get into another positive period, because it's only the short-term things that are broken down now, but not longer term. They're still in good shape. And you can see momentum in here is just rolling over a little bit. It's barely able to give any ground. In this cycle right over here, it rolled over for a little while, as you can see, some number of weeks. This was around the election, so that's why that took a little bit more movement in there before it then moved up. But that's what we see right now, is this bottom coming right in here. We're still looking for 366 on the SPY, and the timing of this has been right. Actually, with the under the market condition that we're having right now, and why I looked at the NASDAQ the way I did, is because I really want to be starting to put stocks on the radar that you could be buying in this decline when we get down to these levels. So I showed some of those, and if you didn't see that part of the show, go back and look at it, because looking at the Slimulator Momentum Tracker helped a lot in that analysis. And then we would expect that with the potential for a shakeout on the downside over these next, we'll say, 1 to 2 weeks, we then think we're going to get into a more favorable period. So here we are in this correction coming at the time that it was expected, or the revised time that it was expected. I want you to see this note right over here. I believe it's that this right over here is just the beginning of a top process that I think is going on right now. Wow, I've got the problem right over here. Looks like I'm having trouble with the TOS platform. So that is all I'm going to show you right now. I got through that, thankfully, before that got stuck. And we hopefully brought you information that was really great for you to use. Remember, go to askSlim.com and explore. Make sure you give us a thumbs up in YouTube. Do follow us on that channel. Follow us on Twitter at askSlim. And any questions about these specials that we have about our website at all, or membership, you can write that to Matt at askSlim.com. I want you to be unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.